One name I saw you talking about recently, which is, well, controversial maybe even now, is Hertz. And,
Yes.
the SEC weighed in. What's the story there? And do you see value in that particular business?
Well, there's a lot of value in Hertz, especially on the secured debt. And the reason is that whole collateral is all the cars. So the cars are new or they're 1 year old. So there's a tremendous amount of value in Hertz. The problem for Hertz, and the reason they filed, is they actually needed liquidity. So, to end up having, they had a certain amount of cash, and then they needed debtor in possession financing. Um, the reason the SEC came in is because the value of that stock had moved up. So it was actually better for Hertz, as opposed to borrowing money, to end up issuing shares. The problem with that is intellectually that makes a lot of sense. But when you've got the unsecured debt of Hertz is trading at 25, 30 cents, that would imply to you that the value of the equity is worth zero. Yet there was all this equity value, and I think the SEC stepped in saying that, look, we're trying to make sure that people understand that there's a lot of risk to this equity. And that unsecured debt, which was at 35, is now trading around 25 cents. So the secured debt is going to be fine. It's really going to be the unsecured. And for that to have value, Hertz has got to start operating again where people are coming in and renting cars. The problem is very few people are going away on vacation and are renting cars, or are traveling and are renting cars on the business side. So I think it's going to take a little bit longer.
You talked a little bit about this cycle, and I want you to drill down maybe a little bit more. You and I are about the same age. We've seen a bunch of these. How does this rank or rate compared to other cycles that you've worked through?
Sure. Look, I think today, I know you're not supposed to say this, but it's like a once in a lifetime opportunity. You really, it's a once in a lifetime, but it happened 10 years ago also. So,
Mhm.
but I would say you're not going to see this again, where you've actually got an economy that's fine, and you've got a Fed pumping trillions of dollars in, where really the issue is how long does it take for things to turn. So I think for us, you've got an opportunity to invest at a senior level and do extremely well. So you'll either get paid out or you're going to end up owning the equity of this company.